This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain, and cryptocurrency space. My guest today is Checkmate. I don't think that's his real name, but I assume it is a pseudo-anonymous identity. Checkmate is the lead on-chain analyst at Glassnode. This is very interesting. Delighted to have you here. Welcome to the show, Checkmate.
Thanks, Andy. It's great to be here.
Great to have you here. And do I detect an Australian accent there, Mr. Checkmate?
You do indeed. There's one thing that I cannot hide, and that is the accent, and by default, the place of origin. So it's good. And yourself down in Kiwi, it's good to have people down here on the right side of the world.
It sure is. It sure is. Well, let's to begin with then, just before we move on to Glassnode, just I suppose, whatever you're comfortable sharing in terms of your own background and a pathway into Bitcoin and the analysis space.
Yeah, absolutely. So look, my background is actually an engineer. So I designed everything from road, rail, tunnels, holes in the ground, mines, all that kind of thing. So my background was very much focused on data, engineering models, and visualizing that information, right? Taking complex problems, turning them into something that is reasonably digestible. And then somewhere where I really found, my skill set kind of meshed quite well was taking all that complexity and explaining it to clients who don't need to know all the technical details. They just need to understand the story, the narrative, the distilled version. So that's where my skill set came from, working with big data and models and then distilling it into actionable information. I found the cryptocurrency market in 2018, and I distinguished that from the Bitcoin market because I never understood Bitcoin. I never looked at it. I never appreciated it. I bought the very top of the Ethereum chart in 2018, lost a whole stack of money on every coin under the sun, all the way down to December. And when I saw my portfolio consistently halve and then halve again and then halve again and then halve again, and then there's probably a few more halves in there, I eventually said, I'm clearly doing something wrong. What am I missing? But the space as a whole fascinated me. So from very late 2018, 2019 onwards, I finally went down the Bitcoin rabbit hole and started really studying the asset itself. And from that point onwards, macroeconomics, how the world really ticks over, monetary policy, all that kind of big picture stuff. I've always been a big picture person. That is what got me hooked. And from that point onwards, Bitcoin has just essentially been the kind of the centerpiece of my life for many ways. I just found myself focusing more and more time on it. And then I found on-chain analysis, which really was only getting very, very early started in late 2018 with the realized cap. And then, we saw some of these models start coming out and, I started poking around and playing with the data and looking at these long-term trends. And really 2019 was kind of my formative years where I just, focused on this field, started realizing that there's actually going to be some serious edge in all of this. The rest is kind of history. It's a small industry that's growing very, very rapidly, and it's just been such an amazing thing to be a part of.
Awesome. Yeah. No, I think there's a couple of points there that they're really common data points for a lot of people when they first get into crypto. So I guess I'm talking about a lot of people typically they tend to buy a top of some particular market cycle, and then the key point is to stick around, because even though a lot of people have had that experience of watching their portfolio get cut in half and half again, as you so eloquently put it, as long as you stick around and perhaps go deeper into the rabbit hole, if nothing else to build your conviction, then things do tend to cycle back up again. But it can be a rough ride, that is for sure, right?
You have to pay your tuition. Everybody who enters market, and I think this is the same whether it's Bitcoin or whether it's something else, any market. I think people need to pay their tuition. Everybody enters thinking that they're a wizard and they can make money for free. And the reality is that it's anything but, right? It's markets have a way of moving against the crowd towards maximum pain. And most of the time when you think you're getting rich, and this is the thing, right? One moment in my time that just stuck with me is once I clicked to Bitcoin, right? So think back into 2018, start of 2019, and it's crawling down there at 3K. I thought I was still pretty wise. And I thought, you know what, I'm going to make a spreadsheet and I'm going to map out, you know, if I buy for the next 12 months and it's trading down here at 3,000, I'm going to be rich. Look at all this Bitcoin I'm going to have. And then April Fool's Day happened and just started ripping up towards 14K. And reminded me very quickly that the game is not that simple and you're not going to get away with it. So you really do have to think for yourself. You have to let the market do what it does and work within that, right? It is a force that you can't control and you are certainly a passenger to. You're just trying to find the highest probability outcome at any point in time.
Yes, very nice, wonderfully said. Well, let's. What is Glassnode? Let's start with Glassnode, then Checkmate. So, yeah, high level. What's the I suppose elevator pitch for Glassnode?
Yeah, so Glassnode is it's an intelligence platform. Really, it's a place to find information and edge about this market and this space. So the beautiful part about Bitcoin and even many of the markets, like our derivatives markets built around it, the data is all transparent. So, and it's kind of interesting balance because whilst the data is public and transparent, actually turning that into actionable information is a quite specialist field. So really what Glassnode's done, it's taken the public information, whether it's blockchain data, whether it's, on-chain metrics, whether it's derivatives data, open interest, funding rates, all these types of things, and bringing all of that information together into a intelligence platform where people can actually find edge, extract data, and use it in their models and analysis to make better decisions.
Awesome. So, I'm excited to dig into some Bitcoin analysis with you. Before we do that, yeah, love to. I suppose with Glassnode, be good to understand who the target market is, if you like, and perhaps some of the different use cases for the different market participants that are using Glassnode. Can you, elaborate a little bit on that?
Yeah, absolutely. So the way we look at it, there's generally two pillars that we will normally classify things into. There's kind of our retail level product, and really what that's focused on is, you know, it can be anybody from the active trader to the casual investor. And, you know, for me personally, I'm a long-term investor. I'm someone who likes to basically dollar cost average, add at opportune moments. I'm not someone who's sitting there on leverage trading. So for me, the concept of on-chain works quite well. It's about understanding kind of the health of the network, where the market is, what are the most probable outcomes, is the macro trend healthy and intact? So it helps essentially retail level folks with the tools that are available, plus the research that we provide. It's helping them to kind of structure their pathway, have the conviction, because that's the thing with a volatile asset, having the conviction and, you know, knowing to just sit tight and do nothing is a very, very hard task. And really, that's what I find the Glassnode suite for the retail investor provides, that kind of assurance, right? Once you understand how these metrics work, you can help build your conviction and go, you know what, the macro trend is still actually looking very, very strong. So that's kind of one pillar, the retail side, casual investors. Then there's the more active trading side. And that's generally more geared towards our professional tiers. So, it can be anybody from, professional traders who are using algo bots and all that kind of thing, all the way through to hedge funds and large institutions. So we have this retail side, we have this, the professional side, and that tier is really looking at the inner, like you go down to hourly time frame, pulling out, the full history of the data, looking for statistical correlations, all those types of things. So it's kind of the more passive and the more active side. Generally speaking, that typically fits retail and the professionals whose job is to actually trade these markets. So it's really trying to provide that depth of information for the pros, but also the kind of scope on where the market is flowing, how the supply balances are occurring, all this kind of thing. So it's a broad product, but they're kind of our two primary pillars.
Yeah, yes, indeed. And look, I think you mentioned it yourself that on-chain analysis is very much a new field. And I suppose, crypto itself is, blockchain is obviously an extremely new asset class and a new field. And so this on-chain analysis is almost like a new niche form of analysis within a new asset class. So it's quite in some ways you're kind of on the bleeding edge of this stuff. Just love to understand who are the founders of Glassnode, and how did you end up getting the position as the lead on-chain analyst, and also love to understand anything you can share in terms of the growth metrics for Glassnode, the platform itself, like user growth and where your users are coming from, anything like that.
Yeah, absolutely. So Glassnode was founded. We've got three founders, Jan, and Raphael, all from various backgrounds. Jan and Jan come from the trading, the financial side. Raphael comes from the data science. He's an ex-neuroscientist, which is fascinating. I mean, I'm an ex-engineer. You get kind of people in this industry that come from all over the place, which I always find fantastic. But essentially, they built Glassnode in the bear market, right? In the 2018, 19, 20 bear. Having identified that there is a gap in this space. As you mentioned, it's a nuanced field and a nuanced industry, but simultaneously, it's also, if we expect, and I certainly do, that Bitcoin is going to become a fairly significant centerpiece in the global economy as we move forward. Understanding how it moves, how it flows, and the fundamental, really on-chain is kind of the fundamental analysis, right? Rather than getting a quarterly report from a company each quarter, essentially every 10 minutes you're getting new information. So that was kind of the basis of the company. It's certainly expanded quite dramatically. I joined in February, and I think we had somewhere around 9 to 10 people. We're now pushing up towards 30, 40 people, and continuing to grow. Bringing on more engineers, building out, new metrics, new tooling, expanding out just the services in general, launching new products. So it's been a really exciting growth phase. I actually I applied as a data scientist. One of my Twitter followers essentially pointed to me saying that Glassnode was hiring, and I'd been spending a lot of time just building up on-chain metrics, and I taught myself Python, not because I'm any good at it, just I wanted to get off Excel, and it was just more useful for working with big data. So I'm certainly no data scientist, but I applied for the role nonetheless. And whilst it wasn't the right fit, there was an opportunity there, because I've been building my own on-chain metrics for some time. And the thing that really hooks me and that I spend my time looking at is the market psychology that shows up in, you can read any trading textbook and read about how people buy high and then sell low, and the smart money do the exact opposite. They buy low and sell high. You can see all of these human behaviors of fear, greed, FOMO, all of this play out in Bitcoin's database, because people jump in at the very top. Transaction counts go through the roof, fees go through the roof. You can see the exuberance in the data. Then the bear market comes and it all disappears. And that was the thing that kind of captivated me. And the guys kind of said, well, look, we don't really we want to expand the content line, right? We want to expand our research and our newsletters and articles, and just step all of that into a new field. And that was essentially the opportunity that we created for myself. And, now our team is slowly growing as well. In terms of our growth, I mean, when I joined in February, and, February would have been around, I don't know, 30 grand or 40 grand or something in terms of the Bitcoin price. And essentially, when we map out all of our usage metrics and the number of people who are coming onto the platform, the amount of engagement that we're getting on our various content lines, it essentially maps the Bitcoin price chart, which is, I'm not really surprised, but it's still an incredible thing to see. Our viewership went through the roof whenever we get volatility. During that May sell-off, every single Bitcoin metric, transaction counts, volatility, people using the network, active addresses, the whole lot. That May sell-off was the peak of pretty much every metric, as it was for usage of our platform, right? You see people come in and using these tools when the volatility really kicks in. And then naturally, when you go into a miniature bear market that we had back there in May through to July, that was essentially the exact same, right? You see people slowly filtering out. And what's fascinating at the moment is we're sitting at or just below a new all-time high. And most metrics across the board, whether it's inside Bitcoin, whether it's usage of platforms, whether it's trading volume, all of it is still extremely low. Google Trends, it's all extremely low. It's very, very quiet out there, which I find absolutely fascinating, considering we're pretty much at all-time highs right now, which is
Yeah.
there's big things to come.
So yeah, that's fascinating. So a couple of things there. So when you talk about how the kind of the audience metrics, if you like, track quite closely to the price of Bitcoin. So this is something that is common right across the crypto content industry. So here at Brave New Coin, we obviously watch our website metrics, our podcast downloads, our YouTube views, and as you've pointed out, Checkmate, they all track very close to each other in terms of whether they're up or down, and that in turn tracks extremely close to the Bitcoin
Incredible.
price. But yeah, it's fascinating, as you say. At the moment, we are just really just a hair under the Bitcoin all-time high, but there's not really any mainstream media attention, Google search metrics. There's no sense of real FOMO or euphoria. Things are just kind of tracking along. And well, I think this is probably a good time just to get into a little bit of I suppose the on-chain stuff. Love you to just to use a few of the different on-chain metrics that maybe that either preferred favorites of yourself or anything you've worked on yourself, because I know that there's just such a lot that you guys have, and or even just use I know you publish the weekly on-chain newsletter, which is a fantastic resource. So I was looking at that earlier today, and the kind of the high level takeaway, I think you guys said that as Bitcoin consolidates after the recent all-time high, constructive developments in both derivatives and spot markets indicate that further upside is the most probable outcome. So maybe we can just start to unpack that in any way you want.
Yeah, absolutely. So, I mean, look, the beauty of on-chain, and with the week on-chain is probably a good place to start. So that's our weekly newsletter that comes out on a Monday. And we follow that up with a roughly 20-minute, 25-minute video content on our YouTube channel on Tuesdays. Now, what we tend to try and do with that newsletter is keep it relatively high level, but also provide a kind of a unique combination of metrics. You'll see that each week, the metrics that we're using will change. And the reason we're doing that is we're trying to show you how you can use multiple different metrics to solve a particular puzzle, right? Any day of the week that we're looking at the market, it is a puzzle. And we're looking for what tools provide us with the best insight for that particular moment. And, bull markets have a very different character to bear markets, and obviously vice versa. And then there's transitional periods that flow between them. So as an example, right, there's a couple of categories of metrics that I will use on a regular basis. I look at things like on-chain activity. That's just a very simple one. And what you generally see with that's things like active addresses, it's things like transaction counts, new wallets, all these types of things, how many non-zero wallets we have. All those types of things generally have this kind of bear market character and bull market character. And right now we've got a very, very slow grind out of a bear market type character. So as we were just talking about, it very much maps to retail have not shown up yet. The media hype machine has not been turned on. It's still very much in a quiet phase. And my big takeaway from those types of metrics is even when you map out the worst bear markets through Bitcoin's history, the floor level is always increasing. So, as we discussed, some people will come into the market. Those that stick around, right? If you get 10% of people who buy the top and don't leave, that's what we're seeing in those activity metrics. We're seeing that there's this rising floor price of the minimum amount of activity that goes on, even when conditions are the worst. So that's kind of the activity side of things. I'll then also look at things like supply dynamics. So supply dynamics is essentially who owns the coins, how old are they, whereabouts are they? Are they in exchanges? Are they in miner balances? Are people essentially buying and hodling? My favorite metric of all metrics is by far the hodl waves. And what that essentially does is it plots out the coin supply, right, between 0 and 100%, and it puts all the coins into age brackets. Are they a day old? Are they 1 week old, a month old, 6 months old? And there's a general rule of thumb and statistically based. The longer that a coin stays dormant, the more likely it is to stay dormant. And if we think about this psychologically, the guy who bought his coin at $200 really doesn't care when the price drops from 60,000 to 59 and then rallies to 61. The amount of profit that guy is in is so high, he just simply doesn't care. So what he's more likely to care about is the coin that he bought at 58,000, right? Because he's still stacking. His cost basis and his recency bias is attached to that recently accumulated coin. So generally what we see is that most of the coins that are relatively young, younger than 5 months or so, tend to be those that are constantly trading, moving around. They're kind of the liquid coins. The longer that they go quiet and dormant, the more likely they are to stay dormant. There's only one exception to this, and that's during full-scale bull markets. Once the market really starts to rip and moving into kind of euphoric territory, that's when we see these older coins coming back into the market. Now, that's okay because those older coin holders are essentially taking profits. And when the market keeps rallying, it means there's enough demand to absorb them. But eventually, you're going to get an oversupply. So really, the supply dynamics is kind of looking at that balance between who owns the coins, who is selling them, who is coming in and buying them, right? And is the market in equilibrium, or are we starting to see too many coins coming back into supply? As the price goes higher, you need more dollars to absorb that sell side, and eventually you just have to have some kind of correction to kind of smooth things out. So they're the kind of categories that I'll generally look at overall.
Yeah, very nice. And well, if that's the case, then, because I know you're a TA guy as well, and a lot of the best analysts, like Josh here at Brave New Coin, he puts out a lot of analysis content on the Brave New Coin YouTube channel week to week, and Josh always likes to use a really good mix of both technical analysis and on-chain data. And I think anyone that can do both is a weapon.
Yeah.
But with that in mind, then, yeah, I mean, what do you, and I know this is just speculation, but love to get your, I suppose, opinion on where you see the market at the moment, and what you expect to see for the remainder of Q4 and then beyond.
Yeah, absolutely. So, and I think this is really what we tried to capture in the week on chain this week. Overall, the market looks extremely healthy. So, what we generally see as we approach new all-time highs is some of those older hands start spending their coins, and this is very normal. What we've essentially seen so far is kind of less what I would call a trend, more an event. We've seen a couple of profits being taken, right? It's very normal. We see people spending into the all-time high, into the market strength. But what we haven't seen is a continuation of that. It's kind of like the profits have been taken, and now people have really backed off and they're just sitting tight. And what that's telling me is that people are actually expecting higher prices, and to a higher extent to what we've seen in previous market cycles. So right now, the market is looking extremely healthy in my view. I think when we combine that with the fundamental trends that are going on, things like the ETF launching, that's going to create a whole new level of dynamics, with the cash and carry trade and just new attention coming into it. Bitcoin is reaching a new level of liquidity and market attention. So my view is that I think it's going to be a fairly positive and healthy Q4. I'm in the camp where I think it's going to take longer than people expect, and that's a positive thing, right? I want to see this market essentially grind higher, go through periods of consolidation. I want to see this slow and steady stair-stepping pattern, right? I'm of the opinion that we went through a bear market 2-3 months ago. That in my opinion was a bear market. It has all of the hallmarks of the bear market. Right now, it looks like we're only just coming out of it. And when I think about that from a technical analysis standpoint, we've essentially had a big consolidation. It's a big monthly consolidation. We've recharged the gas tank, and we've got legs to go, who knows how high from here. But then I expect more or less one and the same, 3-4 months of sideways. Everybody thinks it's all dead and over. And then we just keep powering on.
Yeah, fascinating. Well, if that's the case, then there's a lot of talk. I suppose there's different interpretations of what a crypto market cycle or what a Bitcoin market cycle looks like. So, people used to talk about the kind of the 4-year cycles based on the halving, and then there's either the lengthening cycle or there's the diminishing cycle. There's stock to flow. There's the long-term logarithmic channel. Do you have some thoughts there? And maybe stock to flow. What's your take on stock to flow?
Yeah, so let me touch on the cycles, and then we'll come back to stock to flow.
Sure.
So, I found the cycle debate quite fascinating. Because I spend so much time with the data, I tend to not worry about what the timeline of a cycle is. I tend to look for what are the behaviors that, what does a bull market look like historically? It's old hands selling to new hands, and eventually those new hands own too much of the supply, and we just top out. Now, in terms of, I do believe that the 4-year cycle is most likely a thing of the past. And people have talked about this before. The 4-year cycle was kind of created almost by chance, and largely triggered by the Mt. Gox event. So Mt. Gox that happened in 2013 essentially put the whole market into a period of extreme uncertainty. And it kind of aligned with, back then the halving and the mining had a much, much larger impact, right? Just simply more coins were being mined and sold. And then you had the bear market that was put in by Mt. Gox. That was about 2 years long. And that kind of created this 4-year cycle. And human beings like patterns to follow because none of us know the future, but we kind of want some kind of a roadmap, right? It helps us deal with the future. It's an uncertainty tool. So people started thinking it was going to be this 4-year cycle. And I mentioned earlier, after the 2018 collapse, and we sold off in December down to that $3,000 level, I was one of these people who thought, oh, okay, here we are. We're down in the bottom bit. We're now going to trade sideways for a year. I'll have plenty of time to accumulate, and then away we go. But April Fool's Day on April 2019, we had that short squeeze, right? And that pushed us from 4,000 up to about 5,000. And then the thing really started to run. There was also the plus token Ponzi that was going on that was sucking in like 1% of the coin supply. But that 2019 event was kind of like a miniature bull. And then we had a miniature bear that finally capitulated in March 2020. So that kind of broke that 4-year cycle concept. And if you now think about what we went through in 2020 and 2021, we had the same 3 months of ripping up, right? We went from 10,000 to 64,000, and then we had about 3 to 5 months of downside. So we've kind of broken the cycle, and Bitcoin kind of has this way of, it kind of comes in doubles, right? 2013, we had the double pump. And then if you look at the 2018 and the 2019 peaks, they both look very similar. You have this peak, a big triangle, and then a sell-off, right? A capitulation event. And then in the current market cycle, we had our $64,000 really rounded looking top. Then we had our sell-off in May. Then we had another one that crashed in September, right? And everybody thought that Bitcoin has died again. China banned Bitcoin again. And we had this second rounded top. Everyone thought it was over, and we rallied from then. So Bitcoin likes to come in pairs. We get these two events that kind of happen. I think that the cycles are actually get a whole lot more flexible than people think. I think the halving has a much smaller effect these days. And that probably flows into the stock to flow side of things. So the stock to flow model at the very core is purely based on the coin supply. How many coins are being issued relative to how many are currently in circulation. Now, I think that my core problem with the stock to flow model is it is too simplistic of the inputs to model what is really going on, right? There are just simply too many things that happen day to day. Even if you just factor in the simple concept that Bitcoin is now a political asset. It is now inside the halls of Congress in the United States. It is being talked about by central banks. It's a national currency in El Salvador. You simply cannot model that with a single input of how many coins are being mined. And let's even just factor in that the miners themselves, previously, most miners in China were fairly well known to mine and sell, right? So they were a constant source of sell pressure. Now that miners are actually transitioning, I think we're talking somewhere between 40 to 50% of miners being in North America, Canada, and the United States. They have access to far more advanced capital markets. They can raise debt, they can raise equity, and a large majority of them have a mandate to not sell. They would rather sell debt and equity and pay their bills that way and just not sell them. So I think that the stock to flow it's a cool idea. I think it got a lot of people through the bear market. I think it will end up being correct, to some extent, because it's going to, Bitcoin's probably going to hit the prices stipulated. But I also don't think that it's not something that I use in my model in any way, shape, or form, because I think it's just too simplistic, especially once we move into the world of politics. It's just too uncertain.
Yeah, that does make sense to me. One thing that I've always, technical analysis, I get it, but it's just, and technical analysis guys always say, well, it's just about being completely rational and objective and taking your emotions out of it, all that stuff. I get it, but it can never account for kind of extreme events in the real world, whether that's positive or negative. But let's put you on the spot just a little bit then, Checkmate, and obviously not going to hold you to any of this, but love to just understand what you think are perhaps ballpark price targets for, I don't know, like the market peak or Q4 this year, or anything that you're personally thinking about.
Yeah, sure. So I'm not a fan of like when it will happen, because as you said, it's totally variable. I definitely think it's going to be a constructive and a positive Q4. What I kind of look at, I've got a bunch of models that I generally look at for where we're going to top out. And what I normally think about is, it's a fairly common concept in technical analysis, is mean reversion, right? And the question is, what is the mean for Bitcoin? And there's many of them, to be honest. The simplest being the 200-day moving average. And it's kind of like an elastic band, right? When you stretch price too far away from something that is kind of, in inverted commas, fair value, when it's too far away, the probability is that it wants to spring back towards it. So I've got a whole set of models, whether it's the 200-day moving average, the realized price, it's just some very, very long-term moving averages. Whole bunch of things. And to me, that at the moment, that's giving a somewhere in the ballpark of 150K. To me, kind of feels like where we're going to get the next major, whether it's a correction like what we just had, but kind of this stair-stepping level. I think 80K, 100K, 150 is kind of the stair-stepping pattern, the milestones that I'm looking at. And, I wouldn't be surprised if we get 150,000 and then we get a cool off back down into that $80,000 realm, just to really test everybody's conviction. Spend 6 months kind of consolidating and scaring everybody, and then just start reverting back to the upside. At the end of the day, I'm certainly in the camp where I don't think that there is a top to this market. And the reason being, I don't see a mechanical reason how fiat currency is going to strengthen over the next decade. So when I think about it, there's going to be exuberance that needs to be flushed out of the market. But fundamentally speaking, Bitcoin is, the scarcest asset of all time, and fiat currency is increasingly becoming the least scarce asset of all time. So I think what classifies as a top is probably something that needs revision in our current monetary regime.
I love that. So there is no top. So now now you're starting to sound a bit like Michael Saylor, and that is a
I think that
compliment.
man is going to be found to be one of the smartest men of all time.
Yes, indeed. Look, we've already been going a little bit over half an hour, Checkmate, but you're an interesting guy. There's just a couple more things I wanted to kind of get your take on, because I know as we're talking, it's fairly clear that you are a Bitcoin guy, and again, we talked about those kind of common experiences before, and a lot of people did get burned in, I suppose, 2018 and that bear market and the aftermath of the ICO froth, and obviously everything went down, but perhaps altcoins are more than most. So a few things here, like I know you're Decred as well. So why do you like Bitcoin and Decred? And does it ever, do you ever sort of look at people making ridiculous gains from something like Doge earlier this year, or Shiba of late? And what do you think's going on there?
Yeah, so it is interesting, and there's a lot of people. I often get labeled a Bitcoin maximalist, but most people don't realize that I've actually spent quite a bit of time and continue to do so experimenting with things. Right, I like to test things. I'm an engineer. I like to tinker around, play with different networks, see how they function. I'm someone who likes to come at problems from a first principles perspective. Right, I like to dig down, find the kind of root cause of things, how the world ticks over and works. And try and find out what is the most probable outcome. So until very recently, actually, my view was that I didn't actually believe that things would be eventually built on Bitcoin. I thought that there was going to be kind of Bitcoin as the monetary asset, and then it would get ported over to things like the Ethereums and the Solanas and whatever, to kind of become that, that would be the financial stack layer. And that's certainly a possible outcome. But as I've watched what's been going on with, particularly what's going on with El Salvador, I mean, I just cannot help but marvel at how incredible it is that, the Lightning Network has banked, what is it, 2.5 million people, which is more than people that have bank accounts in that country. And I guarantee there's going to be hiccups and issues and challenges. But so far, it has been extraordinarily impressive how well it's worked. And I also boil down and look at my, what do I do on my day-to-day basis? I spend, I save, I exchange and invest, and I take out a loan, right? That's kind of the extent of, I would say, most people's financial, what we do in our daily lives. There's a few more complex things there and there. Obviously, once you get into business, it adds new layers of complexity and derivatives and all that kind of thing. But for the most part, there's not a huge number of financial services that we actually need. And I'm increasingly seeing that these things can, in fact, be built on Bitcoin, right? There are these solutions that are starting to come to market. When it comes to overall altcoins, as I said, I come at things from first principles. There's a few things that Bitcoin has challenges with. There's no question that nothing is perfect, and that's okay. That's the way the world works. But there's a couple of things in particular that Bitcoin is going to struggle with. I'm okay that it can't do much, right, in terms of the scripting language and all of that. I'm a big proponent for keeping the base layer, the monetary layer, as simple and secure as possible. Security is number one. So you mentioned Decred in there. The thing that fascinates me with Decred is it essentially solves about 5 things that Bitcoin simply cannot solve. And that's okay. There's 2 pathways towards the solution. You don't need to have, you can follow both of those and be successful, but there's always more than one way to skin a cat, right? So what Decred does extraordinarily well are things like on-chain privacy, right? I think that the Bitcoin on-chain privacy situation can be somewhat dire. It's not a great outcome, of doing things like coin joins and all of that. Plus, there's regulatory systems and blacklists and all this kind of thing. It's a complex problem, but I do believe that on-chain privacy is a gap. It may be solvable for Bitcoin, but I would like to see more work on that. And Decred has already solved that with an extraordinarily elegant, basically integrating coin mixing with their staking system, which I find just fascinating. So the privacy is one side of it. Governance is the other side of it. So Bitcoin takes the path, which, and rightfully so, of hardcore rough consensus, you will not change me. And that's fine. I buy Bitcoin because I believe it will be exactly the same now as it is in 100 years. Decred takes the complete opposite approach. It says, well, at some point we need to adapt, right? We are still software. And, we've seen this with the Taproot upgrade. It's a long, arduous, challenging process. Could very well be one of the last upgrades that actually goes through. Soft forks do have trade-offs. They are not the most secure way to upgrade a network. They can be from a social perspective, backwards compatibility and all that kind of thing. But from a network stability standpoint, soft forks are not the most secure method. A hard fork is the superior method. But the problem is, to hard fork a rough consensus proof of work network is way too dangerous, which is why we have to do soft forks. So doing soft forks in Bitcoin is a symptom of proof of work and rough consensus. Decred takes the exact opposite approach. It can make sure the entire network is fully upgraded at the node level. The code is dormant inside the node software, and only after the stakeholders then say, yes, we do want to activate this code, will it come activated. So they've formalized the governance process. There's also things like the network treasury, right? It doesn't have to rely on benevolent, Jack Dorsey's of the world and Square Cryptos funding it. Decred can completely fund itself. And in a world where we're increasingly seeing things like censorship, we're seeing companies that can't support certain technologies because they go against consensus narratives. Decred can build whatever it wants because it can fund itself. That all these things kind of help build up this very, very elegant and sound alternative. In my view, from a monetary asset, it's the only other asset that I think has a standing chance of actually being truly competitive with Bitcoin. I think that there's going to be a diversification argument. There could very well be a period where Bitcoin goes through some serious social volatility. It's going to be political. It's going to get messy. And sometimes having an alternative that is as secure, because Decred does have an extraordinary security mechanism, there is a potential that you're going to have people that want that alternative to balance the load, right? Somewhere that is secure enough to hold that value, but simultaneously you can have this kind of back and forth, this hedging behavior that flows between the two assets. So that's kind of the overview, but I'm certainly, we can dive in to any angle that you want.
Yeah, no, really, really interesting. And I've had Jake from Decred on the show, I think a couple of times in the past. He's always an interesting character, and he talks quite eloquently about the world as well. Well, I reckon, Mr. Checkmate, we go to a very quick break, and then we come back and we'll have some fun and finish off with the very famous crypto conversation hot take round.
Sounds great.
In today's crypto market, the team at Brave New Coin are the sector's leading builders of custom crypto indices. BNC's powerful indexing engine draws on Brave New Coin's premium data to calculate high-frequency intraday and end-of-day indices for a wide range of index products. BNC's custom indices help you to gain exposure to the crypto assets class and track your performance against the market without having to become a stock picker. Brave New Coin's custom indices team delivers experienced consultancy, premium data, and trusted calculation. Contact BNC today to find out more.
All right, we're back, and I'm with Checkmate. Checkmate is my Aussie mate, and he is the lead on-chain analyst at Glassnode. And well, Mr. Checkmate, I like to finish each crypto conversation podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
I'm ready to go, sir.
All right. So, well, the idea here is, reasonably quick and snappy answers, but, you're a deep thinker as well. So, feel free to express yourself any way you like. But let's get into it. Question 1 is, where would you say that you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I would say I sit somewhere in the 90% Bitcoin maximalist. It was 1 to 100, where 100 is Bitcoin maxi. I am probably 90%.
Very nice. Okay, well, what would you say is your firmest conviction, crypto opinion?
That I think Bitcoin is going to replace the bond market.
Oh, nice. Okay, I know this is going to be hard, hot take style. So again, express yourself any way you want. But what's the problem with Ethereum?
They tried to do too many things at once. And I think most recently, the attempt to become money and gas is, I'll borrow a phrase from Luke Groman here, riding 2 horses with 1 ass. And unfortunately, I think they've put stakeholders, people who already own the coin, and network users at odds. I think they've bit off more than they can chew, and I think it's going to come back to bite them.
Interesting. Okay, what's the bullish case for NFTs on Bitcoin?
I've actually recently come around to NFTs. I think ultimately they are essentially a land grab. They're a combination of a land grab and also a expression of flexing, right? You can have a baseball card that's very, very rare, but only the people who you actually show it to in the physical world can see it. On the internet, you can essentially show off your collection of items. It's the same reason people wear gold, because it's an expression of, I don't need this money, I can wear it. NFTs are essentially that same effect of people expressing their tribe, their wealth, what they like, their culture, their personality, all of that within a digital realm.
Do you have NFTs yourself?
I do, yes. And I've more recently started playing around with them on the Stacks ecosystem. You mentioned NFTs on Bitcoin. I actually believe that NFTs on Bitcoin are the path forward and will command an immense premium, because Bitcoin will be around longer than anything else, right? The permanence, the fact that they will exist and cannot be double spent or erased, that is actually what gives these value. You want your art to outlast anything. And in my view, I think Bitcoin is going to outlast anything else in this space.
Is it Crash Punks?
They're coming out soon. There's one that I like, is the Bitcoin Birds, which is only 400 of them. I think they're quite neat. And recently the Megapon Ape Club, which is one of 2,500 almost Diablo-esque style pixelated apes, which I think the art is just fantastic. We've done a great job on them.
Awesome.
And one more plug.
Yeah.
The blocks. Which I think is just a really, really cool idea. It's generative art, but encoding ones and zeros with randomized color set. I find myself scrolling through every day, and my collection is slowly growing.
Nice. Well, look, Checkmate, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So whatever you like here, but I suppose Bitcoin, what does it look like in 10 years' time?
That's a great question. I mean, it's essentially the gradually then suddenly type approach. I think that Bitcoin is going to become increasingly dominant in our financial infrastructure. And as I mentioned earlier, I think the bond market is eventually going to sniff out that inflation is problematic, that some of our policymakers may have lost control of what's going on. And I think that its role as sound money and a store of value will continue to infiltrate the financial system. And I think that's essentially going to drive a whole new wave of financial innovation and probably a stabilizing force, whether it's on our power grids, whether it's on people's life savings. I mean, El Salvadorians have already seen they will have seen essentially up only in terms of their savings, purchasing power. I think it's going to improve a lot of people's lives. And, that to me is really what I buy Bitcoin for. It's here to help people around the world improving our infrastructure. This is what sound money does, right? It's kind of what the Bitcoin standard tries to outlay, is that sound money can improve the overall stability of society. And I think that's the ultimate end goal here.
Wonderfully said, wonderfully said. Well, look, on a similar note, but in reverse, William Gibson, sci-fi author, famously said that the future is already here, it's just not evenly distributed. Can you think of an example of the future being here right now, Mr. Checkmate, but most people just aren't really aware of it?
I mean, I think we spoke about this before, right? The fact that we're floating under all-time highs and Bitcoin is a national currency. We now have ETF products. Wall Street is all over this thing. We're seeing huge institutions stepping in, not because they, some of them because they just have to, because their clients demand it, but others are stepping in because they fully understand it. I mean, when you're deep in this industry and you see the level of smart minds, this is what sucked me in. When you see the smartest people in the world flowing into a single industry and nobody knows about this, that is just pure edge. And I think that the momentum is so incredibly strong on that front, and the vast majority of the world has no idea. There's been too much FUD, there's been too much news, there's been too much just negativity said about Bitcoin. And I think that all of that is going to start ticking back in the other direction. Probably the simplest explanation as to why is that many of the institutions that fund the adverse news pieces are very, very soon going to be incentivized to be saying positive things about it. So I think that tilt is about to swap over to the other side, and that's going to change the dynamics forever.
Fascinating. And, if you're right on that, and I think you probably are, things will just go exponential, and, people just don't understand what happens with exponential growth, right?
Correct.
All right, let's start to close this out, Checkmate. What is your favorite science fiction book, film, show, or universe?
I am a huge fan of Star Wars, and I've recently been watching The Mandalorian, and I think that this is just a great example of a universe that's kept its bones and its character through many, many iterations. Right? I think they keep the storyline enjoyable, exciting. It's not too deep, but it always feels like Star Wars. They've done such a good job of keeping what was created back with puppets and spaceship models. They've done so much to keep that universe intact through many, many iterations. I think they've just done a fantastic job with it and continue to do so.
Yeah, and the cool thing about the Mandalorian is a lot of the special effects, everything is done on the Unreal Engine, which so just shows what is possible today.
That's
Well, Mr. Checkmate, this has been a lot of fun. I've enjoyed talking to you. Probably going to have to call the title of this podcast, There Is No Top.
Love it.
But maybe just to close it out, love you to just give a shout out to Glassnode. Tell people where they can go to find you on Twitter, why they should engage with the Glassnode's platform, and love to hear the origin of Checkmate, your identity, I guess.
Yeah, great. So look for you can follow me at @_checkmatey. The Y allows me to be a pirate on the odd occasion. For Glassnode, we're certainly trying to give back as much as we can, because we understand that many of these metrics can be daunting at first. There's lots of them. Some of them are quite technical. How do you know what to look at? So for anybody that is trying to understand on-chain analytics or just get into this market, I strongly advise we release a 10-minute read on a Monday, which is basically our newsletter. Discusses what's going on in the previous week, tries to outlay what we think is the most probable path forward, and then a 20-minute video. If you learn better from watching and listening, that's about 20 minutes, 25 minutes. So all in about a half-hour investment each week on 10 minutes on a Monday, 20 on a Tuesday, and you will, if you do that each week, you will learn by osmosis, right? The repetition will eventually start to show you how you can use these metrics, and in combination, which ones to look at in certain situations. we certainly try to explain it and give the educational side back. So that would be essentially the where I point you to. If you need anything, feel free to send me a message, and I'll help put you in touch with the correct resources. As for Checkmate, so Mate is obviously a hark back to my Australian heritage. And where Checkmate came from, to be honest, was just, when I entered this market and this space and started building a Twitter personality, I wanted to be pseudonymous. The primary reason is it gave me optionality, right? So, there's security layers and OPSEC layers. You just don't want necessarily people to know who you are when you're in this industry. It's kind of one of those more common things. But at the same time, I can choose to reveal my identity when I want to. But once you've revealed your identity, you can't choose to take it back. So very much so, the pseudonym was something that I started with, and I remain to this day quite pleased that I have, because it allows me the optionality. I can choose when I release it and when I don't. And the Checkmate basically comes from Mate was the Australian side, and Checkmate to me feels like what Bitcoin is doing to the financial world. It's essentially playing a long game of chess. The pieces are moving in the right direction, and eventually it's going to put down the final gauntlet and say, well, nice game, but I've got you. So that was kind of the impetus behind it, and it's just kind of stuck ever since.
I love it. I love it. Bitcoin checkmates the global financial system. Can't argue with that. All right. Hey, this has been great, Checkmate. Love to do this again sometime. But for today, all the best, and bye for now.
Thanks, Andy. Appreciate it. Cheers.
All right, there you go. That was Checkmate. Enjoyed that. As I say, does Bitcoin checkmate the world? Very interesting. No top to the market. Very interesting. Hard not to call this podcast episode There Is No Top. Very reminiscent of Michael Saylor, of course, as well. All right. Well, I hope you enjoyed today's show. Hope you got something out of that. Do check out Glassnode. Quick shout out to my man, Ela Herf, who introed me to Checkmate. Always appreciated, my good man. But yeah, that is today's show. Thanks for listening, everybody. This was the Crypto Conversation for Brave a New Coin.